What's going on, everybody? Welcome to this training video lesson. You guys know I have an option university, and I get questions quite often. And as a matter of fact, I also get people that email me questions. Maybe they watch certain training videos and they email me questions. And so, what I want to do here is I'm going to do a quick video lesson answering a couple of the questions that people are emailing me or some of my students. So what I want to focus on in this video lesson is the SPY, the S&P. This is the ETF that tracks the S&P 500, and I've got a couple questions on that. So the first question I have on the SPY is, we're talking about day trading, first of all. Okay, so if we're going to day trade the SPY, then choice of options for the day trade. Okay, so we've got a couple questions. Choice of options on the SPY for day trades, strike price that you would typically recommend. And so let's do this. So for this training video, let me bring up a blank notepad here. And what I'm going to do is I'm going to copy and I'm going to paste these questions. And again, if these questions interest you, then stick around. If not, that's okay. But one of the things I will ask, if you're new to the channel and you like the content that I provide, please, subscribe to the channel, hit the little bell to be notified whenever I shoot a brand new video, and then, again, like it, right? And also spread the word. And if you have any questions, just then reply in the comments, and then I can shoot videos on those as well, okay? So first is we're talking about the SPY day trading. So let me put that up at the top. SPY day trading. So if some of you want to day trade the SPY, I'm just going to show you the way that I do it. Okay, no right or wrong answer, but this is the way I do it. Traders trade differently. So the first question is choice of options on the SPY for day trade. So what I like to do on the, and I'm going to go over here. And you know what? I'm actually just going to go to this one. Okay. So what I like to do, and this is just me, is I like to pick about 5 days. That's me. I like the 5 days to expiration or the closest to 5 days. So if I look at this option chain right now, we don't have a 5 days. We have a 4 days. We have a 7 days. So me, more than likely, I would do the 4. Now, some traders may say, well, if you're going to take this trade and exit, why don't you do 0 days? You know what? I just like 5 days because, sometimes this has happened to me before. I got 0 days, had every intention of closing it, but then I got sidetracked. I got called to a project or a consultation gig or a private lesson, and I forgot to close it. And if you're in the money, you're going to be called. You're going to be called the SPY. It's $285 a share. I like 5 days because you never know. Okay? So, choice of options, I like to do, well, we'll get a minute, 5 days. I guess that's more on the expiration, right? So you're talking about, let's just do that. We're jumping around. Time to expiration, 5 days. That's me. Closest to 5 days. Closest to 5 days. Okay? Now, it doesn't matter if it's a put or a call. So choice of options for the SPY. So the choice, I'm assuming you mean, and again, this is a question for one of my students, is call or put, right? I'm assuming that's what you mean, choice of options, call or a put. Well, you guys know in trading, call, we want the SPY to go up. Put, we want the SPY to go down. So what I'm going to do is I'm going to focus on the trend, right? The trend. So the SPY right now is trending up on, this is a 10-minute, okay? If you were going to trade on a 5-minute, you would just go to 5-minute. There's no right or wrong answer, okay? I like the 5-minute. If I'm going to trade during the day, what I'm going to do is I'm going to trade on the 5-minute. Now, one of the things that you see here is you see something that says long trade triggered. What I do is I have a 30-minute kind of filter. Now, I heard one of my mentors tell me that rookies open the market, professionals close it. So I don't like to day trade those first 30 minutes. That's just me. I want to see the market kind of make a decision. And what I have is I have this green line, meaning long breach. So what I like to do is I like to measure the range in the first 30 minutes, the high of the range, how high did the SPY get to, and then the low, okay? Then the low. And then, and you can see that is represented right here by my little box, 5, 10, 15, 20, 25, 30. You see this color? That's the first 30 minutes. Now, you may not have this indicator. It doesn't matter. Just in the 30 minutes, you measure the range. Then, whenever the SPY, in this case, trades above the range, so if it trades above the high after 30 minutes, then this is going to trigger and it's going to say long trade breached. Now my bias is to the upside, at least during the morning session, okay? Now, if it were to break to the downside, my bias would be the downside. So right now, and today is April the 20th, it breached long. So what I'm looking for are long setups, which is calls, okay? So I'm assuming your question here, choice of options, call or put, depends on the 30-minute breach, okay? 30-minute breach for breaks above the high, calls, below puts. What strike price? Strike price that you would typically recommend. Now, what I like to do when it comes to my day trading is I like to trade around the 50 delta, preferably that first strike in the money. Now, this is not a lesson on in the money, out of the money, but closest to 50 delta, but preferably the first strike in the money. So if you see here on TD Ameritrade's platform, you have the, I don't know how well you can see it, but it's white and then it's like yellow or tan. The yellow is in the money. The white is out of the money. So what I like to do when I'm day trading is around that 50 delta, but preferably that first strike in the money. First strike in the money around 50 delta. Now, some traders, what they'll do is they'll do close to 70 delta. More expensive, okay? And some traders will even go way out of the money. I don't like going out of the money. I really like to stay around that first strike in the money, preferably around 50 delta, which is basically telling me 50-50, right? 50 delta, these gives you the probabilities, and it tells you, okay, this has a, in this case right here, 49.42% chance of finishing above 285 in the next 4 days. But we're not going to keep it 4 days, okay? That's just what I like to do. Now, if you don't have the colors, you just take a look at the price, 285. So what is the strike that's the first one in the money? It's the 285, okay? Because it's 285.59. So that first strike in the money, preferably a 50 delta. So hopefully that answers that question. Now, in the option delta, okay, well, there you go. So in the option delta is, again, I just said it right there. So around the 50 delta, first strike in the money, closest to 5 days to expiration, the strike price, which again, that's going to reflect with the delta. So whatever that delta is, the 50 first strike on the money, that is going to be the strike price. So in this particular case, I got multiple platforms pulled up. It's the 285. Okay, so whatever strike this is, to be that first strike in the money, that's the route that I want to go. So hopefully that answers your questions. And again, just kind of a extra added bonus, because the next question might be, well, what are we looking for? Well, we're looking for 5-minute squeezes in the direction of the breach. It breached long, so now I want to see, just like you guys who watch all my videos, 8 above the 34, like to see it consolidate, like to see a squeeze down here at the bottom, trend up. We like to see the pattern, which is the consolidation, and then we wait for a squeeze, and then we position size in the buy zone, and we trade in the direction of the squeeze. So that's what we do, guys, and that's going to make your life so much easier, okay? Whatever direction it breaches or breaks above, you stick to that direction, at least for the morning session. The afternoon, after lunchtime, it either is going to continue the existing trend or it's going to break down in this case. And if it breaks down, I'll see the 8 cross the pink, and then I will just wait for squeezes to develop on the downside. But in the morning, and let me repeat, I only trade the direction of the breach. And then I'm looking for a consolidation. Give me a squeeze, just like I teach in my video lessons. And then the choice of options, well, call or put, depending on the breach. Strike price, first strike in the money around a 50 delta, and I like the closest to 5 days to expiration. So I hope that helped. And hopefully that question, and out there, as you know who you are that asked that question, hopefully that helped. For some of you who were wondering that, well, that's great. If you'd like to learn more about options, I'm offering a free option course at tradingparttime.com/book. And the reason it's /book is because I'm also going to give you a copy of my book for free, but the ebook. So you get a free copy of my book, the ebook, and I'm going to give you a free Options 101 Master course. And then again, obviously, if you like the Master course, you can upgrade to the Options Elite course. Okay? All right. Hopefully that helped everybody. And until next time and next training video, I am Trader Jeff Moore, author of the book Trading Part-Time, and we'll see you inside of either the free course or the membership area.